short-term rentals can be a fabulous tool for people to supplement their income and build real estate portfolios and all that good stuff. There is this situation tax-wise that potentially opens up a tax favorable door for those types of rentals. When you are in the hotel business, if you think about it, what you're doing is you are renting real estate to people on a very short-term basis, right? Your whole building is filled with very short-term rentals typically. And in that situation under the tax code, you're not in the rental real estate business. You're in a service business and you are taxed like every other business. So you don't file a rental schedule in your tax return. You just file a tax return, just like any other business that has nothing to do with real estate. What that means is potentially it's easier to claim losses on that activity. That's why people try to connect the short-term rental situation, say with a hotel, to Airbnb, which is also typically very short-term rental period. So I'm a hotel, I can take losses, right, on my tax return. Well, an Airbnb short-term rental, maybe I can take losses and I can avoid that whole passive activity, limited loss thing, right? I can just treat it as a business because it's short-term and therefore captures the special tax ability to take losses. That's what people are trying to do. They're trying to claim losses that would otherwise be limited and open those up on a tax return. The challenge is there's more than one test. It's not just your average time of stay hits the short term. The second test is you've got to provide a pretty significant level of services. If you think about a hotel, they're cleaning your room, they're providing other services beyond just renting you a box to sleep in, right? There's a suite of services that are quite substantial that hotels are providing. And most Airbnbs do not do that. They don't reach that level of service. If that Airbnb activity is a remote activity for you, it's almost impossible that you would meet that test. You really have to be personally involved with that property to even come close to hitting those kinds of tests. If you have income, it's now not rental income, it's business income, potentially subject to self-employment tax, which is going to blow up the tax cost on it.
That's another complicated part of the
It
tax
is.
code that you have to
It
understand
is.
is they may not know what those tax implications could be without talking to their CPA first.
Making it part of your tax planning. And just make sure you understand the exact answer for your unique situation.